Hi everyone and welcome back. Is the economy actually doing well? The earnings season finally started and we can have a look again what is the real picture in the economy. And this week the biggest banks, also BlackRock, Goldman Sachs, Delta Airlines and Taiwan Semiconductors released their reports. Their numbers tell us a lot about how people are spending money right now. And let's look at the big banks like JPMorgan and Bank of America. They say the economy is okay, but there is a split. People with a lot of savings or investments are doing great. BlackRock is the world's biggest investor, now manages over $14 trillion. But for regular families, things are getting harder. More people are using credit cards because prices are still quite high. The banks are actually saving billions of dollars now just in case people can't pay back their loans this year. So the rich are doing fine, but the middle class is feeling a bit of a pressure. Now look at Delta Airlines. They made a lot of money this quarter, but here is the interesting part. Most of that money came from expensive tickets like first class or business class. What does this mean? It means people are still traveling, but they only want premium experiences. That regular economy seats are not selling as fast. Goldman Sachs also had a good quarter. Why? Because big companies are starting to buy each other again and join the stock market. And this means the big money players are confident about the future, even if regular shoppers are a bit worried. But the biggest news is Taiwan Semiconductor Company. They make the chips for your phone and for the AI. Their report was incredible. They made 33 billion US dollars in just 3 months, and that is 25% jump from last year. They are spending $56 billion this year to build even better chips, and they invest in new facilities in Arizona as well. Why? Because they say the AI demand is real. It's not just a trend, it's a major change in how the world works. If Taiwan Semiconductor Company is spending this much money, it means they believe the future is very bright for the technology. So here is the summary. The good news is that technology and AI are booming, and by knowing that we can use it in our favor as well. And the bad news is that everyday life is still quite expensive for many people. Basically, the economy is moving at two different speeds. The tech world is flying, but the average consumer is walking slowly. Speaking about the macroeconomy, let's start with the United States. Inflation data came in slightly softer than expected at 2.7% year over year, which markets quite liked. And it doesn't mean that inflation is solved, but the trend is moving in the right direction. The labor market is still holding up. Unemployment remains low at 4.4%, but job openings are declining, which tells us that demand for workers is cooling gradually. So it's unlikely that Fed will change the rates now again. In the United Kingdom, we saw a positive surprise. The GDP growth came in better than expected. It grew by 0.3% in November, mainly driven by services. And that reduced short-term recession fears and supported the British pound. For the Bank of England, this makes early rate cuts less likely, at least for now. Looking at global data, the picture is mixed. Manufacturing remains weak across the United States and Europe. PMIs are still in contraction. At the same time, the services sector continues to grow, which is basically carrying the economy on its back. This split between weak manufacturing and strong services is one of the key themes right now. And what do you think? Are you spending more this year or are you saving? Tell me in the comments, please. And don't forget to like and subscribe for further stock market updates. Next week is also full of interesting earnings. See you in the next video.